Well, the latest Westpac Consumer Sentiment Survey has just been released for the month of November, and it makes for some very interesting reading. The tentative recovery that we saw forming in October has gained momentum through October and early November, rising the headline sentiment index rising a further 5.4 points to 94.6. That means we're just about 5 points shy of the 100 level, which means optimists are in balance with pessimists. That's a marked improvement on the lows we saw mid-year, up about 14.4%, and a world away from the 75 to 80 reads that we were seeing persistently over the 2 years prior to that. The consumer recovery is definitely gaining traction, but there is a bit of a word of warning in this latest survey. In particular, when we look at the responses over the course of the survey week, it makes for some very interesting reading and looks a little bit shakier when we scratch beneath the surface. Now, the survey was in the field between November 4 and November 9. That spans two major events. One locally, the RBA policy decision on the Tuesday, which saw the Reserve Bank leave rates on hold, but still not prepared to rule out further rate hikes. And then, of course, later in the week, we saw on November 5 the US presidential election and the Trump victory that was announced on November 6. Now, when we look at the daily responses, we need to bear in mind there's more volatility, more sample volatility in these small responses day to day, but I think it paints a very clear picture. Going into the week, we had very strong sentiment. In fact, prior to the RBA decision, the average sentiment read was closer to 100. The RBA decision itself, somewhat surprisingly, made no difference. The sentiment reads on the Tuesday of the decision announcement was still up around those high levels. But following the US election result, we did see a significant track back. So when we look at the responses after the US presidential election result, the average sentiment read across those groups was about 91. So whether you tracked before or after the US election depends about a 5-point swing either way in sentiment overall. And of course that makes it a little bit difficult to interpret. If that weakness post the US election result is sustained, then perhaps sentiment is a little bit softer. If it gravitates back to those pre-election results, then it may be somewhat stronger. So the December month update is going to be a fascinating one to read. Either way though, there is pretty clear evidence in the survey result that the consumer recovery is gaining momentum. The forward view in particular now is outright optimistic. Consumers do expect the economy to improve over the next 12 months and over the next 5 years. And they also expect their family finances to improve over the next 12 months. Where it's lagging behind a little bit is current conditions. Yes, tax cuts, fiscal supports and stable interest rates are providing more support to finances, but it's still coming through fairly gradually, and consumer assessments of their purchasing power are still very downbeat. Overall, there's definitely some recovery gaining traction here. For the RBA though, it's still a little bit contingent on those inflation results, giving some wriggle room for interest rates to move lower. When we look at interest rate expectations, consumers aren't worried about rate rises anymore. They aren't concerned about that, and they're growing in confidence around jobs as well. We're even seeing some signs of improvement around housing. Assessments of time to buy posted a decent lift in the month as well, coming from a very weak starting point and still very uneven across states. Victorians are starting to see a bit of an opportunity around buying, but elsewhere things are still pretty downbeat, and in Western Australia assessments of time to buy a house are still extremely weak levels. Price expectations around the housing market have softened as well, although again there are variations across the states. A November survey included an additional question around Christmas spending plans. We run this every year in our November sentiment survey, and this year things have improved, although we're still not off to the races. Around about 35% of consumers plan to spend less on gifts than they spent last year. That's slightly above the average that we've seen historically, which is around 33%, but that's quite a significant improvement on the last couple of years, where close to 40% of consumers were looking to cut back on their Christmas spending plans. So this year's Christmas is looking like a bit more of an average one as far as consumer spending goes, compared to those austere ones we've had over the last couple of years. All in all, the consumer is starting to turn. I think this is more evidence that sentiment is on a decent upward trajectory. We still haven't quite got to that point where we're in outright optimism, and a lot still depends on the path for inflation and interest rates, and to some extent how consumers land on the US election result in the months ahead. But for now, it's a more positive lead-in to the all-important Christmas sales period for retailers, and signs of some hope at last.